Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market. So actually gold right now stands the victim of the same processes. And since on the market it's running actual dash for cash action, and that's the reason why the gold is dropping as well. So but at the same time we see the signs that this is non-common driving factor for the gold, and it has limited impact on the market, because if you will take a look at the CFTC report in the gold, you could see that the overall position has dropped, but it has not dropped too much. It's just for 20,000 contracts, which is not really big part of the overall positions. The SPDR1 has lost just less than the % of its targets, so the overall process is not really very active. And that's the reason why we treat this action on the gold just as a retracement on the long-term chart and long-term trend. And if even gold will drop somewhere to the 13 even area, well, it still will be just a retracement, and we expect that gold will rebound within the 1 or 2 years, and it's just a pullback in a long-term bull trend. At the same time, taking in consideration that the recent drop is really significant, actually market has disrespected the confidence support on the weekly chart, which were standing around 1550 area, if you remember. It just has dropped through it as it now exists. We suggest that still retracement could be two-leg compounding, and we currently are focused on this hand and shoulders pattern, which could provide us huge A, B, C, top, and D pattern and lead market right to the next support in the monthly chart. The utility of this pattern is twofold for us. First of all is, of course, direct, clear trading setup, which we could follow. But at the same time, this is a great indicator, guys, because the processes that stand beyond the drop on the gold market is very difficult to predict. It's very difficult to say with certainty when this process will finish. And this hand and shoulders pattern could be a great indicator, because if we will see signs of failure, for example, if market starts climbing very fast here, it's dropping above the 1610 area, moving above the 618 resistance, that will tell us that the process running into the United States dollar is over, or near the end. Because the gold will continue dropping only if this process still stands on the way. If we will see that something is wrong with the hand and shoulders, it means that the market is preparing for an upward continuation. So in the beginning of the next week, we're still watching for a response to the neckline support. I just remind you that this neckline is actually confidence support on the monthly chart, and at the same time market is strongly oversold on the weekly as well. So that's really very strong support area that should be respected, and you already see the pullback. As first was last week, first touched pullback right to the 30% level. Now it's dropping lower again. It's showing second possible response here. And take a look. Second level is the overbought. So market ignores the oversold on the daily chart, and we do not consider it, but we could keep an eye on overbought, which works pretty nice here, as you can see. So it also stands very close to the level 1550, 1570 approximately, which will be daily overbought. So everything stands good with this level, which is also corresponds to the left arm. And just to remind you, this is also disrespected weekly confidence support, former confidence support. It very often happens when the market disrespects some confidence level, it tends to retest it from the opposite direction, which is also add some value to this level. On the intraday chart, guys, we're mostly watching for the same pattern as we discussed in last week in our videos. We currently do not consider the possible double bottom because the price action stands a bit different, and mostly we are focused on some kind of the ABCD pattern here. Multiple grabbers that had been formed here suggest taking out of this top. And target of this ABCD pattern stands approximately around 1555, which also agrees with the daily level. that part of the action also could take the shape of the butterfly. So if we take a look, this could be some kind of the butterfly buy maybe. That will be somewhere around 1575. So it's approximately around the same level. It's 1550, 1570 is the potential target that we will consider. Well, the way how market will show the upward action has mostly theoretical value for us because we do not have an intention to take the long position currently. Although, as I said previously, it's not forbidden. You could follow the grabbers, as we said in our videos on the last week, and in general, consider that this position stands good. But for us, as major interest stands around the daily pattern, daily head and shoulders, possibly taking the short position there, and how market behaves around the major levels. Because we're watching not only for the trading setup based on the hand shoulders, but also for the signs on dash for cash action. So whether it's over or not, and it will depend on how market will respond on the hand shoulders pattern. That's our primary interest in the gold market in the next week.